Here we have someone who actually knows what they're talking about. Someone who is professional in his line of work. Unlike Vinny and myself, we're like
ouch.
two dudes.
I try to be.
Try to be. I know a little bit about marketing.
Okay.
I know some things about marketing.
All
Okay,
right.
but this guy knows about money, and he's here to tell us about money. The CEO of Sherwood, also the co-host of Financeiro on YouTube. It's the channel about everything about economics in Brazil, maybe around the world as well. They do a lot of really nice things. Luiz, thanks for being with us today.
Thank you guys for having me. It's amazing.
I did the most formal intro for you. The other two did not get you're our third guest on this show. One of the most anticipated guests from our audience. You actually have more questions asked for you than any of the other guests, the two famous YouTubers.
No pressure.
Be prepared to answer a lot of questions. No pressure.
No pressure.
Everyone is looking to you for solutions, all right? What do you think of this year? Let's start off with that. What do you think of this year? What is happening around the world?
No, let me say one thing. Let me start with this. I think there's a reason why I got more questions than everyone else in this show. Number one is, Leon and Damiani, they're so known, right? They've been out there and people have asked left and right everything they know about them already, right? And I guess you just bring this unknown guy who just recently started a YouTube channel with Nilsi and Leon. So I yes. And then second, obviously, there's an economical crisis going on. So a lot of people want to know about it.
Seriously, man, what is happening with our war right now? Okay, what are we going to do? What's happening?
Look, I think there's a couple of things. Number one, obviously there's a pandemic. Everyone knows about it, right? But I think the timing of the pandemic was pretty interesting because the last crisis was really in 2008. And that's what we call like the big financial crisis. Like everyone remembers the name subprime, derivatives, that kind of stuff that really triggered that crisis. Not a lot of people really understand them, but those are the names that we call it, right? So from 2008, 2009-ish onwards until end of 2019, it was like cruise flight, right? It was like, everyone was just cruising and chilling. Markets were going up forever. And I think it was the long winning streak for markets ever. Over the last 10-year period. So everyone had started asking themselves, what's going to happen? I mean, there's got to be some sort of, that's capitalism, right? Like grow, explode the bubble, come down, adapt, grow again, and then you kind of go from there. That's the cycle. And everyone kept asking themselves, when is the next bubble going to hit? Or going to blow? And that was kind of lingering in the market a lot. And people kept saying it was real estate again. Other people kept saying it was going to be student loan. Or people were going to say it's going to be China bringing so many people out of poverty and not
welcome
force, the word workforce anymore.
I'm representing China in this conversation. I will represent the
really? You're from China?
Power.
Yeah,
oh my God!
I was a double agent all along. I was no, I'm kidding.
And it's so crazy because if you look back the beginning of the year, we're talking about the trade dispute between US and China. Everyone thinking, is there going to be a third war, third world war, because Russia now is on the way and everything's going on. We don't even remember about that anymore. Like who's even talking about that, right? Because all of a sudden we all got caught in the middle of this crazy thing that the last thing that happened on record was in 1918.
So Spanish flu, for those of you guys who don't know.
Yes, yeah.
Spanish flu was the one that we're referring to, 1918. Yes.
Yeah. So but you got to remember 1918, we hardly phone, I think maybe had just been invented or wasn't even invented. There's definitely no internet. It was definitely,
Morse code.
Yeah. And
Morse code was our primary way of communicating across the ocean.
My grandfather who's passed was born in 1917. And he passed at almost 100 years old. And he was born in a place there was no phone, no communication. He couldn't travel anywhere. So it's a completely different world, right? Now the pandemic hits with a twofold effect. Number one is in the top of a market, of a bull market. And by bull market, that's an expression we use to say like a high market, right? When the market is really high and it's been growing for a while, that we haven't seen before. Number two, in the midst of growing tensions between the two world powers, that were really kind of disputing like who's going to rule the world economically and militarily going forward. All of a sudden, this small virus comes in and just puts everyone on their knees. So why am I saying all this? Is that this is unprecedented. As much as we might want to go back to 2008, the reasons that brought us to a crisis were known, were studied, people understood what happened, and they knew how to remediate it. Right? Go back to 1986 with the big oil crisis. People knew what was going on. Go back to 1970s, with the dollar gold standard when it changed. People knew what was going on and they knew how to change it. Now with this pandemic, it's unprecedented. The last thing that happened, we weren't around. The world as we know was completely different, and we don't know how long it's going to take to create a vaccine. What's the impact on the economy? So it's new territory, really, for the economists. It's new territory for policymakers. It's new territory for politicians. And I personally think that's why we're seeing all this mess. Right? People saying things left and right, and really being conflicting about, we should reopen the economy because more people are going to die from hunger than if we lock down, that kind of stuff. And the reality is that there's really very little data for us to support and say this is right and this is wrong, because it's unprecedented. So that's a long way to say we don't know. And the best thing we can do in order to try to at least get a hint of what to do is, number one, look at the past, look at, the previous crisis, how do we get through it? How did we get through it? And number two, try to go back to our values too, right? And try to go back to helping others and making sure we understand that what's hurting the economy is not that we're not working. What's hurting the economy is the pandemic. So we got to kill the pandemic. Now, once we kill the virus and we eliminate the pandemic and everyone's cured, the economy will go back, obviously at a different level, but will go back slowly to where it was. If we don't kill the pandemic, we're going to be shutting down, time on, time off. We're going to be on this kind of second, third, fourth wave forever until we actually have a vaccine. And even with a vaccine, number one, how effective is it going to be? How fast is it really going to work? And how fast can you get access to it? That's a completely different question that we don't know. So yeah, it's an interesting, we're living history right now. It's something that will definitely define our generation.
So Luiz, for those of you guys who are listening,
Mic drop.
Mic drop. First of all, mic drop. But second of all, just to give a little bit more background, Luiz used to work as an economist. Now he runs a company. And being an economist and looking at the current situation, one has to wonder, especially with a younger generation, right? The concept of money, this whole concept of currency, money, globalization, right? Like, how do we define money? Because it's easy to say, you earn money, you spend it, you can afford things, there's taxes, like a very simplified, pedestrian way of understanding it. But what is the purpose of money, and how did this current economic structure we have with globalization came to be?
Wow. Okay. Do we have 2
Big
hours?
question. Well, give us the rundown, because keep in mind,
Gabriel,
our editor is going to kill us. But the reason I want to ask this is because whenever you have a situation, one of the easiest way to solve a problem is to understand the origin of the problem, or the origin of the situation, right? And I don't think a lot of people understand that the whole concept of money was to make life more convenient, not to rule life. Right. Yeah. So how does this evolution occur? And if you can give us a quick rundown of that.
Great. I think great question. Obviously, I was joking. It is obviously a subject of great debate, especially the second part, the last part of your question. But I think in terms of money, it all really started with trade. It all really started with us as a civilization interacting more and more with others. So, you go back thousands of years or hundreds of thousands of years. This, we're now have 7 something billion people in the earth. We maybe had 20,000, 30,000 scattered around Africa. And, we started planting, and we started, building, growing crops. And building small, tools and things like that. And some people started getting specialized. So as specialization of work came to be, meaning I now don't know how to do everything. I know how to do 1 or 2 things really well. I needed a way to get the other things I need to live, right? So one example is you need to eat, number one. You need to sleep, and you need to if you live in an environment where you're protected from threats. So that comes weapons and tools and things like that. And those are the basic, let's say, needs of a human being, right? So if you're specialized in making tools, you don't know how to plant. Now, what you need to do is you need to take tools you know how to make in order to hunt and exchange them for food with someone who knows how to plant. Now, how do I know how many beans are worth my axe, right? And that's when really the concept of a standard came to be, because in the beginning it was easy. You live in the same community. You're like, okay, you give me the food, I'll give you the weapons. And then you start growing. That system starts getting way more complex, right? And then all of a sudden you're interacting with other tribes. And then you're like, okay, shit, like we make really good axes. They make really good bows, right? And because they have access to a certain species of tree that they can get the bark of, that kind of stuff. And then you're like, okay, but like, how do we really measure the value of this? So it really started with beans, with crops, because food is something we all need. So that was the easy way. Now money has to be accessible. Money has to be easily carryable. So you have to carry easily from one place to another, and it has to be divisible in a way where you can, I can give you 10 and then you can give me 5 back or something like that.
Denominations. You need to have denominations of currency.
Correct. Right? Yeah. So that's why the beans or the seeds were very useful, or at least they were widely used for that, because you can just count the beans over there and you can kind of create that standard. Now the problem with that is that the other characteristic of money is that it has to be hard to replicate, because if I can replicate money really easily, I can grow my own money. So you start with beans, and then, oh shit, I can grow beans on my backyard and become a millionaire all of a sudden, right? That's when civilization really moved from that initial kind of bean, salt, into metals, right? And now metals or mine or stuff you mine, you don't produce it, you mine it, right? So you take it from the earth, it's given by nature. So that removes the whole chance of you fabricating more money, at least, right? Or you have to put work into it. And that's why gold and silver and the precious metals really picked up, because you have an intrinsic value there. Number one, it's hard to get to it, right? It's hard to dig it out of the earth. Number two, it's very dense. So you can get a lot of value from it in a small portion, right, of a pellet of gold or a pellet of silver, and it's very easy to manipulate. So gold with just heat it up, and easily it's going to be
fusible.
Yeah, exactly.
Into smaller denominations, bigger denominations, judge it by weight and things like that.
Yeah. So he moved into that, and that's before the concept of state. Right, we're still talking about tribes here. You go to, when the Spanish got to Latin America, they found gold and silver being used as by the Aztecs or whatever to be used as a currency as well. It wasn't just a currency, but also as a form of currency. And then, actually, when the state was introduced, now we're talking about Roman and Empire and the Greek, etc., and Egyptians, etc. The state now had the power to create denomination, right? Because the state has the power to say, this thing is worth 1 kilo of beans and also half of an X. So with that power, what happened was that they could remove, because, if you think about gold and silver, like, it's nice and stuff, but it's very hard to come about. So, for simple people to be carrying gold and silver just to exchange for, small daily stuff is not very, very practical. So that gold and silver and jewelry became kind of a high standard currency, and that's why we call it precious metals, because they're really like on the precious side. And then the currency, and that's why we call it currency, because it's current, right? It flows through the environment or through the city or the town or whatever. The currency became something the state gave value to, and the state said, look, this is now worth this much, and you guys can use it to exchange goods. And obviously, that's the state behind is saying, you can still exchange it for gold if you want to. So we call it gold standard. Gold standard lasted until, believe it or not, 1971.
Wait, so this period of having gold as your precious metal, high currency that the state determines, and then they create denominations, lasted basically from tribal era of humanity all the way to basically after the Industrial Revolution, like a more modernized era after the Great War almost. And why was it abolished then? Why did it disappear? If it worked for so long, why did we all of a sudden whoosh?
So that's a really cool story, actually. It lasted until 1971, and what we call gold standard, meaning you could still go to the central bank and hand in that $100 bill you have right there, redeemable in gold. Yes,
there you go.
So there's two things that happen here. Number one, World War II really hit hard the economies. Obviously, Europe got completely a train wreck. It was completely demolished. And the British pound, had been overall accepted world currency for a long time, up until that point. But the Europe was completely destroyed. The British pound, there was huge inflation, wasn't really worth much. The German mark was an amazing currency, was considered stable for hundreds, thousands of years. The German mark had as high an inflation rate as high as I think 1,000% a month or something like that after the World War II. So after the Second War, we switched, like the system switched to a dollar base, so a US dollar base, and that's really we call it Bretton Woods was it's a city in the US, and that's when they had a meeting, and a lot of the plans like Marshall Plan, you probably heard about that. That came to be during Bretton Woods Convention. This is 1945 or something, 1946, right after the war.
Vinnie, this is your time to shine. Look it up. Anyway, keep going, Luis. This is Vinnie's job.
So Bretton Woods Convention after World War built Marshall Plan, and let's reconstruct Europe. The U.S. dollar now is going to be the world currency, so everything's going to be traded against the U.S. dollar. But people still said, wait, but how can we trust the U.S. dollar, right? What if you start devaluing the currency on purpose so you can get an advantage? What if the U.S. goes bust? And then the U.S. said, no problem. We'll keep the gold standard. We'll keep the gold standard solution, meaning the U.S. dollar is still backed by our reserves in gold. That's Bretton Woods, 1946 or something like that. Vinie will look up, I guess.
Vinnie, did you get the answer?
1944.
Right after the war. So after the war.
44.
So with Bretton Woods, it was defined a bunch of things, but one of them is the dollar gold currency.
Dollar gold currency. This is backed at the time by gold.
By actual gold.
Even though,
somewhere. So what happens is, fast forward 30 years, let's say a little less than 30 years, I think during the Nixon government, the U.S. was having a commercial fight, a trade fight with Europe and other countries about the value of their currency. And they kept devaluing the currency so they could potentially take advantage in terms of their exports. So what the French did was that the French basically filled, and this is true story, and you can look it up, Vinnie, they filled a ship with dollar bills, and they sent it back to the US and said, I want my gold. Give me my gold. Right?
Oh, son.
Yeah. You're gonna screw with me, I screw with you back, basically, right?
Because if I have, technically at the time, if I have this, I could definitely get the ratio to gold, technically, right? Because it's supposed to equate to that value.
Yeah.
And when did the French do this? The 70s? The Nixon era? So, okay, the French did this. They did a fuck you to the U.S. And then how did the U.S. respond?
Well, at first they gave them the gold. And then when the French was getting ready the second ship, then this is not even a joke. This is true. This is
he's like, then I wait.
So basically, what
called our bluff.
Screw it. Like, there's no more gold standard, and we're now completely back. So the dollar became formally just like the other currencies, what we call a fiat currency, which is a currency backed by faith, meaning. The value of the dollar, like the value of any other currency, is based on people's belief that it has that value, embedded value, basically.
So now we're on the trust system for the last 50 years or so, right? If we're saying 70s.
Right.
So the global economy has been developing around this. Now, I heard something, and I don't know too much about how credit ratings work. How does those two correlate? The trust with a country's currency and economy versus the credit rating, and how does the credit rating of a country work?
I think credit rating. A lot of people get it confused sometimes with what it says and what it doesn't say. I'll start with what it doesn't say. It doesn't say if a place is great for you to live. It doesn't say if a place is equitable in terms of this is an amazing place for all kinds of people to be around. It doesn't say if the economy, even doesn't say, very, very, pay a lot of attention to this. It doesn't necessarily state something directly about the state of the economy. The unemployment could be high, the economy could be in depression or in financial distress, and credit rating could still be high.
But the currency would say something about that. If the currency is devalued,
it does. So
right.
The currency
however, the credit rating doesn't.
Now, the currency gives you an instant information towards the economy. Credit rating will give you more of a lapsed information and very concentrated on the capacity to repay that debt. I'll give you one example. Let's say you have $1 million in cash in the bank, and you have at the same time a business that is doing really well, and you're gonna borrow money, meaning you're gonna have to repay. Right? So you have $1 million in cash, your business is doing really well, your credit rating is going to be high. because there's a high chance capacity for repayment. Let's say your business starts going really bad, okay, all of a sudden, but you still have $1 million in cash, and even if the business goes bust, it doesn't touch that $1 million. Okay, if you have like 100,000 in debt, maybe your credit rating won't even budge because your specific capacity to repay that debt is untouched. Although your business might not be doing very well. So it's the same with the economy. The governments are constantly borrowing from the public or other countries. That's how they put currency to the public, is by borrowing money, or they take currency out of the system. Okay, it's by borrowing or repaying money, bonds. So if the US is now going through a depression, but it's still a very stable country, it still has a bunch of money, there's no other, it's only conjectural, there's no structural change on the economy, credit rating can remain high. Now the currency, on the other hand, might reflect something more instantly over there.
So, okay, let's use our relative countries as an example. Let's say, what is Brazil's credit rating right now?
It varies from company to company, but the three major rating companies in the world are Fitch Ratings, Moody's, and Standard & Poor's. These three are, like audit companies. Right? They'll come in, they'll look at your financials, the country's financials, and they'll look at the debt, the tenor, the size of the debt, and the capacity for repayment. And they'll say, there's a high chance the US is going to repay this debt. So they will attribute different levels, meaning different levels of risk for you in order for, if you're going to get paid or not, depending on the level of risk, right? So the highest level or the lowest level of risk, meaning the highest level of rating, is AAA. If you're AAA, meaning there's very, very little chance that the money the U.S. government is borrowing from, or it's borrowing from you, he's not going to repay. And by saying, how does the U.S. government borrows money from me? That maybe it's a second thing. It's when you buy their bonds, meaning you invest the money buying treasuries or Brazilian bonds or something like that, right? Meaning the government pays you an interest rate.
So you're lending me. You're lending
I'm
me.
lending you $100.
Luiz now gives me $100. Okay.
Correct.
I borrowed it. Okay.
Yeah.
All right.
Now, obviously, if you're keeping my money, I'm going to ask for something in return.
What do you want to take from me?
I want to take more money, preferably. Yeah.
Okay. So you want more money. You want more money back.
Correct.
Yeah. Because now that I took this money away from you, and I'm using it to expand myself, and the money is away from you, you want something in return for the time lost there.
So not just the time lost, there's a few factors. And the factors is number one. I don't know Jeff quite well. Maybe if he was Vinie, but Jeff, I don't know if he's
Jeff is a bit of a dick. So right? you gotta assess this. Yeah.
So there's the risk factor. So that we call that default risk. Number two is, Luiz, I need this money for a month is different than I need this money for a year. So I would potentially want a bigger return if you keep it for a year.
It's a fair value, right? Because taking that long to repay you back, you could have used this money.
So that's the third component. That's a third component.
Here we go.
Which is opportunity cost. So by the time I'm giving you money, I'm losing the opportunity of applying that money towards something else. Right? Typically, it would be something safer. So I would look at the bank, like a GIC or a Poupança in Brazil or something like that, and say, oh, they're paying 6% a year to keep my money in a bank that way safer than Jeff. By lending to you, I would want a bigger return or a higher return than by lending to the bank.
Yes.
So that's the concept of risk return. The higher the risk, usually the higher return I expect. Now apply that to countries. Would you rather have $1 million in US treasuries or US bonds that pay you 1% a year, or $1 million in Venezuelan bonds that pay you 5% a year?
Oh, so I need to assess this risk because the US have nukes, guns, they can conquer any country they want. So it's very stable. And I get 1%, which is lower than how inflation works technically. But however, my money is safe. I'm not going to lose a huge chunk of it. Venezuela, I'm above the inflation rate. However,
it's risky
because of how unstable, because of how unstable and risky it is, like Maduro could get overthrown tomorrow, right? And then all the money I put, let's say not $1 million, because we don't have $1 million here. We have $100. That's all we have. That $100 we put in Venezuela bonds could go nothing.
So right now, we just explained to you not only how credit rating works between countries, but also how interest rates work between countries.
So you got to assess. So whenever you get interest rate, all these factors are taken into account. How does this make the world go round? Because it just feels like everyone's just passing money around and giving each other a little extra. How do we ensure that the people are getting things done?
Let's say you have an option. Okay, you have that $100. You can put it towards a business. So create, let's say, your podcast. Okay,
Yes.
And you expect it's going to return 6% a year on
Next
your
year, I have $106 because of this.
Right. But the government is paying you 7% a year, right? Government bond. You can buy a government bond and it can return you $107 in the end of 1 year because the interest rate in that year for the government is 7% or in that moment. Would you invest in a business with way more risk or would you invest
in a lower return?
In a
There's
lower
return because you say this is
And a lower
6%,
return.
right?
Correct.
Yeah.
And a lower return. Or would you just take a higher return and lower risk with the government?
Let's say now I change Jeff into Jeffia, the
Watch
mighty
out.
nation of Jeffia. What I want to invest in a private business, or do I want to place it? I want to bet on maybe, let's say, Germany because they got this shit together.
Yeah. So that's the trade-off here. Now the countries know this. So what they do is they say, shit, our economy is not doing very well. How do we make our economy pick up again? Well, we need people opening businesses, hiring, buying products, building things, producing. So government rate 7%, return rate on the podcast 6%. Now, so no one's opening podcasts, no one's investing in podcasts anymore. Everyone's just like putting their money.
We should have put it in bonds, Vinny.
So now the government's
Jeffia
like,
as a country.
I'm gonna have to reduce interest rate, so I'll reduce the trade-off value to 3%, and the return.
Why are they doing this? Sorry, why are they doing this? Why did they just do
So
that?
people
Because
invest
they
in
want to
business.
foster the economy. They want you to invest in the economy.
So they're lowering their own interest rate because they want to stimulate the economy, so people put less
Pick up
money
the
into the.
pace.
But I guess this is like a double-edged sword because you're obviously lowering the cash you're getting as a government, but you want the cash to be going to the people.
Cash they get as a government. That has nothing to do with the income of the government. The government's income is through taxes. Yeah, and this is we're talking about the monetary base. How governments use interest rates to increase or decrease the monetary base in order to generate, foster or disincentivate growth. Okay,
got it. We're all following. If you're watching this and you're not following, just rewind back a bit. Luis made it very, very clear. So now the government lowers to 3%. You said, but podcasts still remain at 6%, but at a higher risk. Right. Let's say 10%, or I could even double. Right, I could be rich. All these things are possible with a business because I have my own freedom. And then now government bonds are now lower than the baseline. I would be getting a return off my podcast. So now as an individual, what's my decision making?
So you can say, okay, I'm going to put money on the podcast. It's my life dream. And, now you have to buy microphones. You have to, get a nice internet connection. You got to get all these fancy things and computers and stuff. And now what you're doing is that the microphone company is making more money. So they're hiring more people. So salaries are, more people hired means salaries are going up. Prices are going up.
Yes.
Overall. Right? If this is happening across
demand, because demand is higher.
Correct.
The demand for this stuff to drive the economy is higher. Okay.
Demand for products is higher. So what happens when there's a lot of people that want a product and there's not enough products? What happens with price?
The price goes up because the more you pay, the less people are gonna get it.
So let's say you're HyperX that has this beautiful microphone here that Neil
sponsor us. Sorry.
Yeah, whatever. Yeah,
please sponsor us.
So let's say you're the microphone company and everyone's looking to buy a microphone that you were selling for $100, and now you're running out of stock. You're like, okay, I think either I can make more, but I can also increase the price and make more money because my cost is the same, right? So what starts happening is that price starts coming up. The economy gets heat up because the government did that decision of reducing interest rates, meaning I'm not giving money anymore to the government. I'm putting it to work at the real economy here.
Yes.
Now, what happens is this may get to a point where the economy is so heat up that supply can't keep up because obviously, in order to build a microphone, you need to mine and get the metal, and then put the metal to, kind of forged into the microphone and buy different, other parts and pieces. And there's a limited supply of that in the world.
Yes, yeah. Okay,
so prices go up to a point where you start generating inflation.
Okay, so what happens now in this situation where there's inflation now?
All of a sudden, the inflation rate gets so high that the government's like, you know what? This is actually hurting people because it's number one, people that their money, their currency is losing value, their assets is losing inflation value. And the economy is so boosted by these lower interest rates that we actually exceeded, the amount of inflation that is healthy for the economy. So what do they have to do is that they have to hike interest rates again. So now what happens is the 3% versus 6 goes to 4 or 5. The base interest rate for the company is high. And then the people are like, not so many people are opening podcasts anymore. And they're not buying as many microphones. Instead, they are buying titles or bonds from the government.
Oh, why put my monthly money that I'm investing in this podcast with this piece of shit, and I can give it to the bank who can promise me 10% return in 2 years?
Yeah. And now what happens is, again, the other side of it, meaning demand decreases, supply catches up, then prices stabilize again. And that's why all the modern economies today, they operate under what we call inflation target. So they have a target for inflation, how much inflation they think it's healthy for that economy. And the target is what the central bank chases. And by hitting that target, what do? They raise interest rates or lower interest rates to get inflation close to that target on average throughout the year. And by that, they put more money in the economy, take money back from the economy, incentivize the economy, or disincentivize the economy. This is how the global economies work in terms of interest rates.
Oh my God! So we're all puppets on a string. What you're trying to tell us?
101.
So let's say if I were to apply this to like a day-to-day situation, obviously I want to chase when the demand is low. If I want the best prices.
Yes, if you want the best prices when the demand is low, potentially that's the hard obviously, it sounds simple.
Predict, right?
Yes.
Yeah, but the hard thing is to know when that's the case, right? Because the pandemic just all of a sudden made things that we didn't really apply a lot of value very valuable. Yeah. Something that has absolutely no value, like a face mask, before, all of a sudden become very valuable, and that is value. Right? Value refers to a need that could be more immediate or it could be more long-term. Price is the reflection of value in that very moment.
Yeah. Write this down. If you're listening, write it down. Apply it to your day-to-day. Shit, I'm learning so much right now.
And what? Like the crazy thing for me is that I bet you learned this, Luiz, at college, at university, and it's something that probably helped you a lot. And I went through school and never even heard about that. Like I graduated, I did a lot.
Why then? I guess if they teach everybody knows this.
Like
and then
economies
it's less effective.
101 should be like mandatory. And
but if you think about it, Vinny, if everybody knows this, they're all going to try and take. The system doesn't work as well. You need winners and losers, right?
Economists believe that the more information people have, the more efficiently markets can work. And yes. Because, let's say, everything about my product, you potentially can negotiate a much better price for you. If you pay a lower price, and that means you have more money left to do other things. At the same time, I still made enough money that I can make a living and I can be incentivized to generate other profits. Or other products. Now, the problem with that is that that's not always true. So you have monopolies or you have...
That's what I'm saying, yeah.
People that have inside information or things like that, and that can generate big swings in market. But supposedly, if everyone starts from the same base point in terms of information, markets can be very efficient in terms of price. That's kind of how we think. When we start talking about hundreds of millions of dollars, of billionaires, if things were more, if information flowed equally, if everyone was balanced out, and etc., extremes like that would potentially not exist. That's at least the theory in the market.
Okay.
What happens is that failures in those markets, or failure in regulating those markets, or over-regulating the market, sometimes can also be a failure, may generate situations where someone can potentially accumulate that much money.
I wanted to know, what is the difference between a well-controlled, well-regulated economy, like a good economy with like good management of this target interest rate versus inflation, right? A good economy versus a badly managed one. What is the difference between a good one and a bad one?
So good economy versus bad economy. I would start with a caveat there with that. We tend to separate things between good or bad, but there are so many shades of gray here on this one.
Exactly 50 Shades of Gray, right, Vinny? Give me that whip sound, daddy.
Oh, here it comes.
Oh my God, he's so slow with this. Another one, harder, Vinny. Okay, anyway, I didn't expect that sound. Okay, excellent. This is a financial podcast.
Okay, so like economics as a science is not a consensus in any case, as I may sound it like to be. There's different avenues, different chains of thought. The school I went to, it's more focused on what we call quantitative data-driven and kind of more mathematical economics and modeling. So we like to put things and try to model it mathematically and kind of figure out what comes out of it. And we call that more like orthodox economics. Yeah, and it's dates back to studies that were done in the Chicago University many years ago. Anyway, so the economics is usually divided between microeconomics, which is the relationships between people or companies, people and companies, or companies and company. That's microeconomics. And then macroeconomics. So macroeconomics is between countries. Now, when we say an economy, is it good or bad? Managed, very well managed or not very well managed, we're usually talking about macroeconomics, interest rates, currency, inflation, all those big things. Typically, the line of thought in economics that believe about modeling or more orthodox, they're more against regulation. So they want more liberal, more open economies, less state and more markets. There's a true belief in a lot of these people that markets can solve anything. So if there's a conflict here, it's just because there's not enough of a market to balance it out. There's a famous quote by Adam Smith, and he wrote a famous book called The Wealth of the Nations, which is kind of like the Bible of the economies. And so Adam Smith came up with this concept called the invisible hand. The invisible hand means when supply is enough flexible and demand is also enough flexible. Remember, we're talking about perfect competition and all that kind of stuff, and enough people having enough information that they can bargain prices to a level where everyone, are in the same information level. There's an invisible hand that moves prices up or down based on the dynamics of supply and demand. So he created that concept of invisible hands. Now, economists from that line of thought believe that the invisible hand applies anywhere. If you think anything as a market, and if you have enough demand and supply on anything, potentially it will balance out. So one thing that we typically don't think as a market is the job market. We even call it job market, but the salaries, right? Salaries go up because there's more demand for that kind of work.
Like developers had in the last 10 years.
Right. So that's a market. So what people that don't believe in modeling, don't believe in like markets balancing out things will say is that, oh, that's very easy. Salaries are too low. I'm just going to apply a minimum wage here. Companies need to pay this much, and that's it. Okay, and now salaries are not going to be lower than X. But what happens in reality is that because salaries are not able to fluctuate enough, companies may not hire because it's not worth in terms of cost for them to hire to make that product. And then we go into, that's why a lot of the work went to China, right?
Yes.
And because it was just cheaper.
I can make, like, let's say a US person costs $20 to make that shoe in that hour. Me, Jeff Fang in China, if I were to make the same shoe, it only costs me $1, like $1 US, right? Because currency disparity, cost of living, whatever, right? I accept that wage because of the Chinese economy.
So that's a very obvious case where necessarily implying a regulation with the hand of the state, now a visible hand of the state actually putting a regulation, may or may not work depending on how the dynamics of the whole thing. If you have the capacity to move your factory to China, it's not going to work. You're just going to move the money away from here. Now, if you don't, maybe you have to pay your employees higher and then you have to raise price. Typically, this line of thought thinks that economies that are well managed, and history has shown that economies that are better managed are usually more open, and are usually more open, for commerce, for trade, and are usually more focused on less regulation and more letting the markets figure it out, and really only coming in when there's some sort of huge disparity, right, in that market. So if I can maybe place under the categories you have, those would be like the better managed economies.
What about the case of China in this? Where would you place China between the two? Like it was like, like they're encouraging capitalism, but then they're doing it under like a communist umbrella. So now I don't know what the recent scenario is on a global scale, how they're dealing with stuff. To start businesses in China and to do things in China is relatively easy, and there's not a lot of controlling factors.
One thing I want to note is that like we were doing a video with News the other day, so we researched about like state-owned companies.
Yes, there are a lot of those. Yes.
Well, do you know how many in China?
Numbers.
Most of them.
Let me give you other countries first, and then you try to.
Okay.
So Brazil.
Okay, here we go. Let's play this game.
205. Okay? State owned by the union. I'm not talking about states or municipalities. Okay. So 205. I think Norway is 55. Canada is about 34. US is 16. How many in China?
I will say 1,500 at least.
50,000.
50,000. But in what context is the state owned? As in, like, the state owns the majority shares of it?
Correct. And the reality is, China and other countries have been able to create a model that has a fine balance between state and capitalism or markets, right? And now I personally think that China has been able to do that because obviously it was very convenient for the West to have Chinese workers making their shoes at $1 an hour, and you know, why let
little Jeff's making shoes?
Yeah, so let them make it because it makes it cheaper for us and we make more money. And China, you know, smartly enough, took advantage of that and grew with also a controlled, like, regulatory system in terms of not necessarily in the entrepreneurs, but in terms of the state controlling mostly everything else in life, right? Or at least having oversight of it. It's relatively easy to do when you have half of your population coming out of poverty and they're happy now because they have 3 meals a day and they're, you know, they have TV and they have a smartphone. When their sons or daughters are growing up, you know, what's going to be their take on it? Are they going to be happy with the lack of democracy? Is this really going to last? I think that's the big question. And to be honest, if anyone tries to answer that right now, I think they're going to get it wrong. I
think it's going to last, and from a Chinese person perspective, because Chinese culture. That's the thing that the West does not understand. And you know, we're talking about good and bad economies, and I think China is like a balance of the two, of the concept of having a capitalistic society with, like, government intervention forces. The only way I think it fails is when the corruption becomes too high. Right now, you're having people who are relatively thinking great things about the future and about the Chinese legacy and the legacy they can leave behind. But what if, let's say, you're saying, like, the children, right? Maybe not even understanding democracy and Western culture. I don't think Westernization is going to corrupt that. But what if they become more and more tyrannical? If they become worse and worse in terms of, and more selfish, and they lose the original Chinese values that their parents did, right? A lot of their parents fought in, like, the anti-Japanese war. So the whole point is the national pride, national legacy, family survival was huge. I think the way it can go wrong is individuals. Sometimes individuals can, like, a Nero can ruin Rome, a Caligula could ruin Rome, right? And speaking of corruption, now let's talk a little bit about Brazil, because I feel like I really need to understand this concept, right? Thank you, Vinie. Oh my God, why would you do that as a punchline? Okay, anyways, but because I wanted to talk a little bit about bad economies, because this currency is the one that really caught my interest. So I had like 500, 1,000 reais left over for my trip. I found a couple hundred of it. I was really excited. And then I looked at the exchange rate. So I bought that reai at 1 to 2.8, which means let's say my 200 Canadian dollars turned into that 1,000 reais, right? Or something around those lines. The day I looked at the value, it was close to what was 3.9 something. If I were to convert it back to Canadian, I would have lost half of my money. Almost, right? So what is happening here? What is the situation right now? Why did the economy, if you're saying the currency is the pulse on the economy that is almost live, what is the next step here? Like, what's happening in Brazil?
Do we have another hour?
You gotta give me 10, maybe you have 10 minutes, because then we gotta go to the answers from the questions from the fans.
So the Brazilian current government is a mix and match of a variety of different ideologies put together in one government that don't necessarily agree with each other, but were brought to power more for the dissent than the actual consent that he had. The vision of the economy side of the government, meaning the Secretary of the Economy, we'll call it Minister of Economy, right? And his team is what I was trying to describe as like the liberal kind of Chicago school kind of, mathematics kind of pro markets. Okay. That's why the markets got so excited potentially with this guy coming to power, was that there was this guy that supposedly was really good and that was going to come and kind of save Brazil's economy, no matter who was on top of him, right? As a president. Now, The other parts of the government are either from an ideological kind of wing where, it's more about like a very, very like kind of extreme right kind of stuff, a lot of religious stuff involved as well. And there's a part of the government that is like military based, right? So now there's those three constants that are interacting within the government and that don't necessarily agree. They never agreed during the campaign, but they were quiet because they wanted to get elected. So the dynamics of the country became one of these three legs of the tripod, trying to do something, and the other two potentially jeopardizing it. The vision that the external markets and the gringos, let's say, basically got was that
like people who want to invest in Brazil and want to
Right.
spend money in Brazil.
This is a complete mess. Like I get that maybe this guy can do some interesting things for the market there, but like we don't trust, number one, that his boss is even going to be able to kind of put it to work, even if Congress helps. Like they don't have potentially the political capacity to maneuver it through Congress. And there's just like so much noise on everything else, the Amazon and hydroxychloroquine and, with the pandemic and masks and blah, blah, blah. And the noise,
big oofs all around, big oofs.
Yeah. And the noise is just potentially covering all that, right? So we're now covered in noise. And there might be some people who are trying to do like, like no matter, like I'm not going to go into is their plan good or not, right? But the reality is that there isn't any plan, or at least the plan that there is just completely covered in noise right now. A lot of the Brazilians with money are actually investing a lot of their money in the stock market, and that may mean that they are vested with what the government is trying to do. But my personal take is that the reality is that interest rates are as low as they have ever been in Brazil, and they have nothing else to do with their money. So they need, again, more risk to get more return. Going back to what we were talking about in the beginning, they have nothing else to do with their money. They still have a lot of money. Brazilian wealth, as much as we have a lot of poor, we still have a lot of rich people, and they have to do something.
Oh, it's filthy rich. I had the exposure through
right.
my
but the gringo
money
money is draining out.
My money, my eyes in my bookshelf. Okay,
So
what's happening to that now?
Last year or so, the foreigners, I think the foreigner flow was negative 60 billion or something like that. That's $60 billion that were either invested in Brazilian stocks or Brazilian bonds. They were in reais, all of a sudden getting converted back to US dollars and sent back abroad. So remember the supply demand thing and the price? Now think that the currency is the price. There's a lot of reais that all of a sudden need to turn into US dollars to go out. So a lot of reais flooding the market. What happens to the price of the currency? Gets devalued because you have a bunch of reais.
Too much, yeah.
They're trying to sell reais. I need to sell reais and buy dollars.
Hold on. Yeah. So I'm a dumbass. I didn't do this. Let's say people with actual investment, like, serious quantities of investment.
Yeah.
They looked at the political situation. They looked at all the noise. And throughout the period of the last 2-3 years, they basically said, fuck it. This is too much risk. I want to put my money something else. I'm going to convert my reais back to USD.
Right.
Okay.
That's
And then
exactly
when they did that, you're saying that flow was negative $60 billion.
Correct. Meaning all of a sudden there's $60 billion in new demand to be bought. In order to buy dollars, you need to sell the reais.
Yeah.
So what happens when there's a big supply of something?
Loses value.
So it's a big supply of reais and a big demand for dollars. So dollar gained value against the real. The real against the dollar.
This is what you're saying then, because of this noise, regardless of what the plan is, if they're like shitting all over the walls, no one's going to invest in Brazil.
Yeah, and that's obviously not the only factor, but that is one very important factor, and that's why a lot of investors put money. There are other factors like interest rates somewhere else or opportunities and other things. But the reality is, the sheer reality is that a lot of the foreign investors pooled money. Stock market in Brazil has been mainly fed by Brazilians recently buying. The foreigners are all getting out. And that's why they're selling reais and buying dollars. And in the end, that's why the real.
If you're looking for 1,000 reais, anybody want to buy 1,000 reais in my bookshelf?
In Vancouver.
I am selling right now.
And that's why we say, Jeff, that currency is in a way a pulse for confidence. If investors are confident, they buy reais, sell dollars so they can invest in Brazil. If they're not confident, they sell reais and buy dollars to get out of Brazil. So it's as simple as that.
Right.
Damn.
So You're saying whatever the fix is unpredictable. Whatever is going to happen is not unpredictable. However, if we lower the noise and make Brazil more marketable internationally, let's just say that way, right? At least that will help.
Oh yeah, absolutely. You know, it takes a minute to kill, someone's reputation, and it takes a year to bring it back up, right?
All right, that's our solution, Vinny. Let's market Brazil. We're gonna go to a drawing boards. We're gonna help Brazilians. I'm gonna say everything I like about Brazil as a gringo, as a Chinese person. We're gonna get Chinese tourists. We're gonna pretend COVID doesn't exist. Oh my God, COVID! Jesus Christ!
Yeah.
Brazilians, don't worry. Brazilians are already pretending COVID doesn't exist. So.
Yeah, I mean that's true. We just need the rest of the world to do it and just be like, we'll call it the Black Death. Like instead, we'll remarket COVID.
You hear a lot, and Vinny probably hears this, or at least knows about this a lot, is that a lot of people are saying, oh, but you guys are just cheering against Brazil. You're roaring against Brazil when you say those things, right? And you're just being so pessimist and that kind of stuff. And look, number one, you got to differentiate the government from the country, right? Brazil is much bigger than the government, any government, right? It is a country where we were born, where we own our culture and everything else that we have in life. My company, right, is all vested in Brazil. Sherwood is 100% vested in the growth of the country. You know, that's where we have a competitive advantage. That's where we're growing. That's where the majority of my assets are. So a lot of people say, oh, you're in Canada. But, dude, most of my money is in Brazil. I mean,
physically we're here. Just that.
I want the country to get better because it's going to be better for everyone. And when I'm critic of this government, as I have been of previous government, and I would like to state that very clearly, I have been a big critic as well of previous governments. It's because I want to see it improve, not the other way around. I guess I'm just close with that.
I think that's a great way to end off this portion of the podcast. Thank you for bringing that energy, man. We have a few questions from the audience. Now, I know you tend to, you would love getting context and details because you want people to learn. We're going to have to do this as a speed round. Which is the first speed round of the history of our podcast. You ready? Yeah. Bola de rápida, whatever the fuck you just said. So I want you to give me the 2-sentence answer to each of these. Okay? Two sentences.
Okay. Emilia EFR asks you, Luiz, tell us a challenge or a difficulty you face or are facing as a startup that no one or no book prepared you for. And also if you had any achievement.
It's freaking hard to build a business from scratch. I'll tell you that. But it's very rewarding. That's my achievement to get to the point where we are right now.
Awesome. Get used to it. Okay, right. That was a good answer. That's the length we want. All right. That elongated 2 sentences length.
I can be short.
Here we go, Vinny. Go, Vinny.
Asks you, Luiz, I can contribute with specific economy questions, but can I ask you to tell us how it is being an economist in Canada? Things are easier than in Brazil?
No. Number one is when they look at you coming with a degree from a different country, it's always harder. And number two, I've never really worked as an economist. I already had a career before. So that made it a little easier from that perspective. But I can't really answer as an economist because that wasn't really my job.
What was your job before? Sorry if I can ask you.
So anyway, I'm an economist by trade because that's my education, right? But I always worked as the treasurer, meaning the person who runs cash for the company. Yeah.
Talita asks you, how did COVID-19 affected Canadian economy?
Like any other economy, it's a big hit. I think Canada will potentially recover faster because we've done our homework in terms of at least holding the pandemic better than other countries. And I think that's going to be the key for any economy is that if you want to recover faster, you got to hit hard first.
Ramon Lobo asked you a similar question. How hard do you think it will be for Brazil's economy to recover from the pandemic compared to other countries? For example, Portugal is already in a post-COVID state, while the spreading is far from controlled in Brazil.
Well, I think I just said that, right? I mean, you have to hit it hard. And I think the European countries did that because they know the harder you hit, the sooner you're out of it. What kills the economy is not people not working. It's the pandemic. That's really what kills the economy. So you don't want people getting sick. You need people healthy, right? If they're not healthy, it doesn't matter. You can open all the shops. You can do all the things. They're not going to go or they're going to be in the hospital.
And
there's no money if we're all dead.
An economist. You're hearing this from an economist. But if I ask you, Luiz, do you ever regretted the choice of being an economist? And if you needed to have other work, what it would be?
I actually landed on economics by kind of chance. That's an interesting story. I wanted to be an astrophysicist, actually.
Wow. No wonder he's such a nerd and give us such detailed answers. God damn.
Being an astrophysicist in Brazil at that point, you can, probably realize it wouldn't pay much. So I just said, what's the next best thing that has a lot of math and that, might be fun? So I just did that.
And final question from Vinie. Can you tell us a little bit more about Sherwood?
What is Sherwood? Yes, absolutely can. So Sherwood is a two-sided market platform where you can. Jeff is making the faces, and I'm like, what the hell?
I'm gonna do this as a YouTuber excitement. I'm gonna be a hype man with YouTube face
He's an
thumbnail
entertainer.
expressions. Here we go.
Entertainer.
The Chair is a two-sided market platform where you can find other playmates to either people who have similar interests to play with you, find coaching, find people to give you advice, all instantly with a touch of one button through a phone app. Our vision is to potentially achieve at some point any game, any device, anytime, anything you need in the game, any kind of service, or looking for playmates or play squads or anything like that. You can use the app for and create groups, interact with your favorite influencer like Vinie or Jeff here, and you can play with them potentially, and you can make them rich too at some point if you want.
Cash money, economy, supply and demand. Supply and demand.
The reason why we created Shadow at first was that we felt there's a bunch of people out there who accumulate hundreds and hundreds of hours of skill and knowledge in games, and very hard for them to monetize. And on the other hand, a bunch of people potentially looking for that skill, looking for that knowledge, wanting to learn, and are willing to potentially pay a small fee or not, just because you want to connect for fun. We just want to create something instant, something cool, and that's something different. And that was better also than the current experience in the kind of random matchmaking that you have in games. So that's how Sherwood came about.
Sherwood is a gaming social network, so you can learn and you can meet people that play game. I already heard someone telling me that.
I don't think it's a social. I think he's creating not just a social network. He's creating a basically, like, I hate using this word when I talk to digital media, but he's actually creating an ecosystem here.
Yeah,
like where people are organically helping each other out.
Traditional social media that we have today is you browse through a wall of different posts, right, and photos, videos, right? or words, which is Twitter, right? And that's basically what you do. We're not like that. So we're not a social media company. What we are, a social app. Absolutely. And I think Jeff's word ecosystem is great. I heard something from a partner the other day saying, I was explaining to someone else, and they were like, so this is kind of like, let's think of an arena where, you're there in an arena and you might find, someone to play for fun, or maybe there's a competitive game going on and you join in, or there, some pro players that you want to pay to teach you. And it's just like that place when everyone can gather, and get together and meet each other, and it's a wall-guarded place where people are not going to be toxic, or they're not going to be, offensive. Everyone's safe, everyone's welcome. That's kind of the idea that we're trying to build. I don't want to put any kind of label to what it is, but if it is something, it's ecosystem arena. Not really a social media platform, but a social app for sure.
You think this is a bit of an evolution in how gaming economy works? Because,
I think so.
Because you've shortened that bridge, right? So, traditional social media platforms, sometimes you send out a tweet, you hope you make a friend, and then there's all those processes. The intent is set when you have an app like this.
Correct, and that's then you're right. I think that is the future. Anything shared, going forward will be the future. I think shared economy has proven again and again that it can disrupt different sides of the economy. We've seen it on the taxi business, we've seen it on the
Uber
rental business, right? And we've seen it on the job market too. You have Fiverr and all these things that you can potentially. But have we seen it in gaming yet? Not so much, really, right? I mean, it's still very concentrated within the publishers, within the the Steam or the platforms or console. You're a gamer. In the end of the day, Jeff is a gamer. Vinie is a gamer. It doesn't matter if you're playing
gamers.
You play on the
gamer
Switch,
boys,
right? You play on your PC. You play on your phone.
Yes,
right. But you're a gamer, so you want to have your gamer profile as a person, not as Jeff who plays Overwatch, right? And that's kind of what we're trying to create.
Amazing. I mean, shared economy is basically part of the future, right? Like you're putting a pulse on this, and hopefully it works well in gaming. I'm kind of excited. I'm excited for you guys to officially fully launch, full speed ahead.
The stage of development we're at what we call soft beta, and we're in very shortly we will be potentially coming out to full beta. If that's
you have a lot of coaches already. I cover a lot of titles, a lot of games, a lot of coaches.
And it's not just coaching, right? You want to find someone fun to play with for free? It's there. If I show you the data behind how many people request just a random match on Fortnite on our platform any given day, you guys would be blown away. It's just like there's so many people alone out there, guys. So many people that are looking for an experience that they just can't get, right? And it's not just the people alone, but people looking for other people with similar interests as well. And the starting point is the game, but it could be much more than that, right? What do you do in the game? It's really fun. Like I created a word cloud of the description field of our of the groups that have been created at Sherwood. I can share that with you guys. And the majority of words is, number one is play. I mean, jogar, right? In Portuguese, play. Second is come in, meaning come in my group, right? And third is together. Yeah, it's really fun to watch this, right? And you kind of see what people's interests really are. And this is just all organic, creating the platform. So it's really excited to see, we can learn so much from the users. And kind of give back to the community as well. That's already an accomplishment, I think.
And the good part for me that you mentioned is that a safe place is toxic free. Because I know, like, as a gamer, I'm tired of it. Like, it's such like so many toxic players, and then you're creating something that is safe for everyone, that people are motivated to interact with each other. Because League of Legends taught me something. You open the game, dash, mute all, then you start playing. So now you're creating something that I'm safe to talk to people, to know people, and that for me is like the gold part. That's crazy.
And that's not what you want, right? I mean, you're there already.
It's a team
you want to
game.
interact with people, right? You want to be a team, and all of a sudden you're just playing. Like, what's the purpose, right? So yes, we have created a tool where you can report toxic people. It goes back to us. We look at it, and
there's ratings on people you play with. It's just kind of like if you have a shitty driver in an Uber, you don't want to ride with him again. You don't want that guy to driving other people, right?
Exactly.
So that stress you get from a driver that's creepy and hitting on you as a woman, you don't want that as a epic gamer boy who's trying to have a fun time in League of Legends either, right? So it applies to so many different situations. I'm glad there's a service like this, because I mean, I have this all the time. Last time I was playing League of Legends with a friend, it was a nightmare. Every mistake you make, it's like a God telling you. Yeah, there's judgment from God himself, who's like, whatever, like Corno69 is his actual username. And then he's telling me how my mother, should have not give birth to me, and how he's gonna fuck her. Like, that's kind of like the wrath I incur from God, Corno69. So anyways, I'm glad Sherwood exists. Thank you so much for making this, because I think that's going to solve a lot of our problems here.
Yeah, that's what we want.
And thank you so much for the class, right?
For the class on economics. You're gonna be probably the guest who's invited back for a second time the most, because you have expertise, unlike us. So
come on, look, happy to do this anytime. Really fun. I always like to talk about these subjects, and it's really cool to talk to you guys like this and have this conversation. So please invite me anytime. I'm always available. Okay.
Perfect.
Damn, thank you
Goodbye,
so much.
everybody.
Pleasure. Take care, everyone. Our socials are on the screen if you want to follow us and ask questions for Luiz, because I'm pretty sure he's happy to talk about it as well with you. So see you, Jeff. See you, Luiz.
Ow.
Bye.
Beijos.